Hello guys, it's me Abdi, CoreFX mentor. This video is the first video for the full course of Malaysian SNR that I wanted to teach you guys. And as you know, I'm going to uh, really change the way you really trade after you finish this course. So I'm not really going through all about the contents and whatever I'm gonna teach in it. You have to read the PDF that I have sent and really always start from chapter one where we will start about the price action. So this is the first lesson of the course. So start watching videos from this video and please watch over and over again every videos until you understand. So let us start the explanation and learning it. There will be some exercises or homeworks that you will guys do and then present it. I hope, yeah, better learn it and change the way you really trade from now on. So we're learning a full course of Malaysian SNR. It's me again, Abdi Core FX Mentor. So now let me explain informations that we need to understand before we go through the full course. So each video will mean a lot of information, will also give a lot of information, guys. So I have to explore uh, about truth, the truth, okay, the truth about Bryce action. About price action. We have to know more about the price action really, and then yeah. So we know price always travels from level to level, but you have to be reminded that there is logic that's behind moving the price. So when you see Bryce is moving from level to level, that means Bryce is seeking a liquidity or building a liquidity. So when Bryce is really moving an aggressive move, so it's gonna seeking a liquidity or really building a liquidity. So liquidity will always exist in the market and therefore as it will also be manipulated. So uh, we really wanted to know where the liquidity is so that we can know where price is moving to. So there is one legendary trader whose name is Wake Off. So Wake Off proposed a Huranius device to help you understand price movements in individual stocks and also the market as a whole, which really he depicted as a composite man. So what does he mean a composite man? Bryce action. When Bryce is moving, there are some logics. So the composite guys or composite man means the market makers. They can do a move and also manipulate the price. And all the fluctuations you see in price action in the market is really happening under the manipulation. So I'm gonna really telling you that there is some ways you can really make money or really trade. So when it comes trading, there is only two strategies. Okay, there are only two strategies that you can apply in trading. Okay, so the two ways or the two methods that you can work or maybe trading is really technical strategy. You have to use technical strategy or you have to use fundamental strategy. So in this course, I'm gonna teach you the technical strategy. how you can really react in the price. So what we are learning now is a technical strategy. It's not a fundamental strategy. So that is you have to understand. So we know why we use the technical. We know how we use the technical after you complete this course. So first thing first, we have to ask what the technical is. What is the technical? Technical is how we react in the market. You have to understand that whenever we are making on the charts, it's like we are uh, searching for how we can react in the market. So what is technical analysis? Basically, technical analysis is the study of price action using chart method. When it comes to chart, okay, we have to understand that when it comes to technical analysis, analyze is really uh, the study of price action when it comes using the chart method. So charts that we use are also categorized into one, there is a candlestick chart, okay, candlestick chart, and also um, there is a line chart, line chart. There is also a bar chart. Okay, bar chart. So these are how we will uh, really interact in the chart. It's like what we will do is like technical analyze. So we are learning technical strategy. What we are gonna do in the on the chart is like technical analyze. And there are three charities that we can work in. But let me tell you, for the bad boys of this course is to focus on candlestick charities and also line charities. We will not really trade, we will not use the per charity. We will only focus on the uh, the per charities. So my guys, first thing first is like we will also really learn how price is exactly formed because we want to understand exactly how we can absolutely make out the price before we go through the main concept of this course. So we have to always bear in mind in this course, these are the ones that we will focus on. We will focus on candle charts and also the line charts. So what the candle chart is like, it always displays information on what is called OHLC, which means these things. Because when we using on a candlesticks, we will get what is called the information of the price in this method. Like it will show us as open price, high price, okay, high price, and low price, and also the close price, the close price. So this is also shortened as uh, open, okay, open, high, low, close. So this is really how price forms. But I will show you in this video how price forms in as a candlestick. So, price always of the financial instrument is showing information like how price opens, how price forms high, and how price also forms low, and how price closes. This is called the open, high, low, close, which is sorting in this method that you see right here. So we use this information of open, high, low, close to see and understand the price behavior along with the chart or with the candle charts. So this is really how the time and price also interact and have relations together. You have to understand that we must learn more about how the time, the time and also the price has relation. Okay, has a relation. So before I go through about the price and also the time has have a relation, I want to show you how price forms the open, high, low, close, and then we will continue in more details about the price action. So uh, we know we have two candles that always really is on the charity uh, or candlestick charity. So we have two candles. One is bullish candle, okay, and you know the information we will get the bullish candle will also be formed open high low close or open low high close. We have to understand the relation between them. So we have bullish candle and also we have bearish candle. We have candle. So in both in both bearish and bullish candles, they will always show us the information that I gave before. So let me show you. There is something that this candle is doing. There is something that the other candle is doing. We have to understand. Okay, there is something that this candle also is doing. We have to understand these two candles, how they form first before we go through all other informations. So this is the most important thing to know about the price action first. Okay, yeah, so I want to show you guys. So we have price open and also price close. So this is all about the this one, okay, this information, it's all about open, high, low, close. So where does a bullish candle open? So it opens here, okay, bullish candle opens here, okay, and bullish candle also closes here. uh, Bullish candle also closes here. So there is a high and a low of any bullish candle. There is a low here, there is also a high here. Okay, this is how price is formed in a bullish candle. So I will also show you the logic movement and the pattern that the bullish candle will form. So this is the low. Like so on bearish candle opens here, opens here, and also it closes here. Okay, and it closes here. So there is a high every candle, whether it's bullish or bearish. So this one, it has a low here and it has a high there. So I want to also tell you the pattern that will form. So price exactly opens here, okay, and then goes down and also goes up and then yeah closes there. So it goes up and then closes there. So this is how each candle will look like, okay? This is how each candle will look like. This is the movement that this candle is doing, okay? You have to understand that each candle is representing this pattern when it is on a daily, when it's on an even lower time frame. So the other concept of the other pattern, the logic that's behind this is like price opens here and then it goes up and then goes down and then it goes really up and then close somewhere here. And this is also the other logic of a bearish candle. So why am I teaching you this information? I want to tell you something. This diagram, we really and rightly assume this as a fundamental truth about the price information which is given per session. You have to get the information on every session how price is informing. The the other thing that I'm teaching you this is the logic, uh, the logic behind, okay, the logic behind price movement, price movement. This is why I'm really giving you. Why am I giving you this? Why am I teaching you this information? This information is giving you the logic behind the price movement. Okay, it's giving you the logic that's behind the price. So guys, how does a price move? Okay, let us say we have a bullish candle, or let us say uh, price wants, okay, price wants, okay, if price wants to move up, how does it really move? Okay, if price wants to move up, it will always first go down. I mean, like it must first go down. Okay, if price wants, the logic behind the price movement is, if price wants to move up, it must first go down. Look here, we have a bearish candle. Let us say if let us say when price is in a bullish, okay. So this is okay, when price is an uptrend, when price is moving on an uptrend. So the logic behind when price is moving uptrend is, if price wants to go up, it must first go down and then go up and then, yeah. The logic movement of uptrend is when price opens, it must go down if it wants to go up. And same like, or the vice versa, it will be the same. If price wants, on option 2, if price wants to go down, if price wants to go down, go it must go up first, or it must first go up. It's when it's when the price is downtrend, guys. Downtrend, when price wants to go down, it must first, for example, price wants to go down, it must first go up. Like you see, okay, price opens here, okay, price opens here, it goes up and then goes down, then close. So it wants to go down. When price opens, it must first go up and then go down. When price wants to go up, it must first go down and then go up. That's the logic behind the price movement of each session for each candle stick. I think right now you know the reason that's behind the the line charts. So I'm also going to tell you one thing. Why are we learning this information and why price is moving? So we have to understand the essence of every major player in the financial markets. So it is something that they do. They always do manipulation, and they manipulate the price, and this is their own job. This is what they do. And because they wanted to get their own advantage, they wanted to make money from the manipulation. So in this course, we want to focus on learning more about the liquidity on price action, so that they are always trade of the liquidity, because liquidities are a bulk orders that are resting on each level of support and resistance. And this is why we want to learn more about the Malaysian SNR, where always there are a lot of orders or liquidities. So in order to track the support and resistance, we have several types, more types of SNR, but we will discuss in the chapter of Malaysian SNR. So we know the line, we know exactly the candlesticks. So we will also use a line chart. I think you know really know the line, the okay, you know the candlestick, one of the charities that we will use. Okay, uh, charities also, you know, the price, the logic behind the price. And the other thing that I'm gonna teaching you now is that I want to explain for you is the, okay, it is the, this will be the line chart, guys. This will be the line charts. Why are we using the line chart? Okay, line chart. Why are we using the line chart? Because this information is very important, guys. Before I go through all other concepts of Malaysian SNR, you must know this information first. So what is the line charts and why are we using? So the line chart always and always shows and displays information on the or candlestick's body. For example, the candlestick body is always showing information, but when we change it into line charts, we can see the information that candlestick's body is also showing. So it is really something that has a relative into the close and open price per session. For example, every candle has a close and also another candle has an open. When there is open and close meet together, we will get information. So that information will be clear and tracked on line charts. For example, each candle each candle will has something like that. We know that the candle information, as we have explained it here, the candle information. If this candle is bearish, we know where the open is. If this candle is bullish, we know where the close is. Okay. Okay. So this is a bullish candle, guys. For example, this is a bullish candle. So the bullish candle opens here. Okay, the bullish candle open is here. We don't want the open, we want the close. The bullish candle also close here. Okay, the bullish candle close here, and also the bearish candle opens here. Okay, opens here. So together they make the SNR. So open close means the SNR. Here is the information we want. We have to know this candle is close and this candle is open. Where we will get here. Where we will get here. I will be explaining how the SNR forms, guys, but right now we have to know how Bryce always forms. So you can see now that we have open and close levels of the two candles. And when we convert the line charts, Bryce will always look like something like that. And this will be the track of the line that's showing both close and also open sessions of these candles. So the line chart always negates or shows always the body close and body, let me say, it always shows the body close and body open of a price, and it always negates or ignores the candlesticks, wicks, or shadow. We don't want it to focus on when we wanted to make our support and resistance. We will never and ever use the wicks, because wicks is always for manipulations, and we will discuss about it. But when we are making our support and resistance in this course, always focus on the body close and also uh, body open, candle open and candle close. We will focus on only the body, because something that I didn't mention it is we have a body of the candle, and this is the body of the candle, guys. Bear in mind, inside this is shadow and this is also shadow or wick. This is called the wick of the candle. This is called the wick of the candle. And here we have body. Okay, we have body. Okay, body, and we also have here a body. So this is said shadow. Okay, this is shadow. Okay, shadow. This is called candle wick. Okay, or shadow. Shadow. Same like this one. No matter how long, how small it is, this is also the shadow of the candle. So we will not focus on the shadows and wicks of the candles. We will only focus on the body, especially the candle close. We will always focus on the candle close. Okay, that's what we will always learn. So if you really don't know how to make the candle close, use the line charts. It will show you something like this. when uh, when it is uh, a bearish market. When it's bullish market, it will show you something. When it will show you something like, right, it will show you something like this. It will form something like this. Okay, and then price will always have open, since this will be and close. Yeah, this will be like this. Okay, and since price, this one is the uh, down, this will have the close, not this one, because this candle this candle opens here. This bullish will open low and this bearish will close here. So the close is where we will always focus on. We will make where the candle closes, and then that's exactly how price will form the open close. So I wanna I wanna go through the I wanna go through the line. I wanna go through some examples of the line charities, and also the uh, the candlestick charities. Let us go on here. Let us go on here, guys. We have candlestick charity here. We have candlestick charts here. So in these charts, we have candlesticks. Where is the open of a bullish candle? Where is the close of a bullish candle? Where is also the high and the low of a bullish candle? And also vice versa for bearish candle. All right. Here we have two candles, right? I want to show you the open. Where is the open of this candle? This candle, since it's bullish, it opens here. Okay. Sorry. It has an open here. Sorry, candle open here. Open is here. Okay, this candle opens here. Okay, candle open. or let me tell you open. Type it open, yeah. So the candle close is here. The candle open, and also we have candle close here for a bullish, okay? For a bullish. So it closes there when it's bullish, since price is moving up. Since price is moving up, price opens here and then it goes high and then comes back and then close here. So in order to go this market, it goes down and then go up. So after price opens, price open here. So in order to go up, it must a little bit go down and then go up and then come back and then close here. That is how price of the bullish candle is. On the other hand, when price wants really, when price is a bearish, where does it open? The open of a bearish candle, I want to show you the same, yeah, next to this one. The same candle, which is a bearish, may have open level on the high on yeah, let me show you. That's the open of the bearish, okay, candle. And there is also a close of this candle. The close is there. But before the price go down, how does price always form? When price opens, here, when a bearish candle open, if it wants to go up, it must first go, sorry, if it wants to go down, it must first go up and then go down. When it creates low, then somewhere here and then closes. That's how a candle of a bearish forms the most. So I think we have to understand why we also want it. So there is another information that I want to add uh, this information of the price action. Then we will go to the next lesson of the price action, which will be the manipulation, guys, and rejection level. So here we have the price open. We know why price is open, why price is really and really closing, but we have to know the other logic that's behind. So the other logic that we still want is we always buy at the we always buy yeah, I want to tell you the half of the candle is called the equilibrium. Equilibrium means where two markets always meet. When two markets always meet. So it is like the start and the ending. So, what do you really want to understand, and why do you really want to understand about the equilibrium? Equilibrium is like a level that two power or two elements that has the same power meet. For example, buyers and sellers meet at the same level. So, and we know something. Uh, if we have an history, for example, we have an ongoing history. So when this history is over, so the other history begins there. So here is where the previous story ended, okay? And here is where the next story starts. Okay, that is really where two equal power always meet. So this is the start of the new story, and this is the uh, end of the previous story. Okay, so where they meet here is the 50 percentage of the both stories. So we call here 50 percentage of the stories, which is uh, which we call also the equilibrium. We call equilibrium. This is also called the uh, equilibrium level. So each candle has a 50 percentage. You have to know that each candle has a 50 percentage. According to this candle, there is a 50, there is a equilibrium level, okay, and this candle also has an equilibrium level. So the other thing that I want to tell you is when two candles meet on their lows or with their lows or highs, we also have the equilibrium. That's the logic behind. Let me say, when there is when there is open and close meet, yeah, what I mean is like the equilibrium or the 50 percentage or the equilibrium level of two candles is equal to this information that I'm going to teach you. It's like uh, a candle close, let me say a candle close and also candle open meet. So when they meet, this is the equilibrium, okay? This is the equilibrium. I wanna make it where the equilibrium is on two candles. Let us move this. Let us move this, okay, and come here because this is the information that I have explained a couple minutes ago. So let me remove this one and add some shadows for this candle so that you will understand the concept. So there is a shadow here or wick. Okay, there is another wick. Okay, there is another wick. There is also another wick here. There is also another wick. There is also another wick. Okay, so now I want to show you the equilibrium level. Okay, the equilibrium level of this price is here. Okay, the equilibrium level of this price is here. Okay, so these levels, we always look here an opportunity of sell, because where this open comes, we always sell. Okay, we always look for selling opportunities. Okay, sellers, let us say like here we got sellers. Sellers are always on there. Okay, so we got sellers here because this equilibrium level, this equilibrium level, this equilibrium level, we got sellers, and this equilibrium level, we got also buyers. Buyers, buyers. Let me make it bigger and then change the color into blue. Okay, let me put it on the lefty so that you will see the difference. Okay, so on here we also have, this is the open close. You see, this is the open close of when we are buying, and this is the close open, because this is the close open and this will be the open close, guys. Open close, you have to understand this. So my friends, this is the equilibrium where we always have buyers. Buyers are really waiting for the price to come on here, and when it comes sellers, we always have on here, since we got resistance here and here we got buyers. Anyway, I want to show you the diagram of the price movement. So when price really open is here, okay, it goes down, and then goes up, and then price really closes somewhere there, and then it opens here and then goes up and then goes down. Yeah, when it goes down, then came here and then, yeah, something like that. What I mean is like when it weakened and created the low, price will close somewhere here. Price will close somewhere here. So this area, we have equilibrium since open and close meet. So this is where we will have sellers. Price will sell off because sellers are interested there. Same like that, I can also mention it. We have the open candle since price is also, sorry, I think we have something mixed. Let me show you. Here must be, yeah, this is, we also have the same. This is the open close. Yeah, same. So this is the close of the candle. Yeah, we have the same. Let me show you. Okay, this must be show it something like this. This is the close that's creating, and since that's the open, since that's the open, yeah, so do like this. So anyway, where this candle open and candle close meet is the equilibrium of 50 percentage, where we have sellers, where we have buyers. Where these two candles, the close and open meet, we have the sellers. I think this information helps you better, and in the next lesson in this chapter 1 price, we will learn more about the price action and manipulation. So I wish you the best and keep watching the next videos that are coming, guys.